Very good evening to all of you. Now, what we did in the last class, just a recap for those who have joined today. So, I just want to make you aware about what we discussed in the last class. Okay. So, what we covered in the last class was about that why this paper has been offered. Number two, that what is the significance of national income accounting and how it is going to help you further in terms of being a chartered accountant when you join as an auditor or maybe as the taxation expert, whatever field you want to opt for. Okay, so that is what we have discussed, and we have discussed the basic concepts of national income accounting. That means what is the concept of GDP? So just a recap of GDP. GDP is gross domestic product. That's the fulcrum of national income accounting to measure any country's growth. And that is how countries are divided in developed countries, developing countries, underdeveloped countries on the basis of gross domestic product. And gross domestic product has two core components. That is, one is about production and second is about price. Production of goods and services and the price of the good. So then we had discussed about nominal and real GDP. Nominal GDP, when you take the price of the base year and the output you take of the current year. So let's say we are in 2022, when you take the production of 2022 of different sectors, maybe agriculture sector, wheat. When you talk about secondary sector, it can be manufacturing sector. When you take tertiary sector, it is about services which includes telecommunication, banking, insurance, health, education, all those services. Okay, so these three sectors is about production, which adds value at each step. So we take 2022 production, but we take prices of base year. That is known as real GDP. And then we had shared the concept of deflator. What is deflator? Deflator is, for example, you take the price of the current year, 2022, an output of the current year, and you compare the price today of tomato, let's say tomato in 2022 with respect, or let's say oil, petrol. So petrol prices today with respect to petrol prices last year. You have seen how it has increased. If we start taking those into consideration, the GDP of the country will be highly escalated. So to deflate the impact of inflation, what we do, we take prices at the base year and we calculate GDP deflator, that is nominal GDP. That means the output of the current year and the price of the current year divided by output of the last year by the price of the that particular year, output of the current year, output of the current year and price of the base year. Base year was has been taken 11 and 12. So that is what we had discussed. Okay. So I don't know, Prema and others are writing that they're writing me, sir. Am I looking like sir? I'm a female. I hope you can see me. Okay. So we are sharing today. We'll go forward from here. And then I told you three basic mantras of national income accounting. What are the three basic mantras of national income accounting? When you go from gross to net, that is GDP of the country is, what is GDP of the country? GDP of the country is, we say GDP. What you read in the newspaper is GDP at market price. And what we are saying about national income is NNP at factor cost. We had shared last class the conversion, three golden rules of national income accounting. When you go from gross to net, what do? You deduct depreciation. What is depreciation? Depreciation is consumption of fixed capital. What is consumption of fixed capital? When you use your machines, your equipments over a period of time, they have a definite period of life cycle. So every year there is some depreciation in it. The value goes down, and that is what we deduct. That is known as consumption of fixed capital. That is, you go from gross to net. So when you go from gross to net, you deduct depreciation. When you go from net to gross, you add depreciation. That's rule number one. Number two, we have shared domestic to national. What is domestic to national? When you go for D to N, domestic to national, that means you are adding what? You are adding net factor income from abroad. What is net factor income from abroad? Factor income paid abroad and factor income received from abroad. The difference of that is net factor income from abroad. So if you add net factor income from abroad, that means you're moving from domestic to national. So domestic to national. And if you go from national to domestic, obviously you deduct net factor income from abroad. Last is market price to factor cost. What is market price and factor cost difference? Market price is for a consumer, from the consumer's perspective. And factor cost is from the producer's perspective. So when you go from the market price to factor cost, what happens? If on a production, indirect taxes are imposed, so the tax, excise duty and others which are imposed. So what is going to happen because of that? The cost of production will increase. If the cost of production increases, then in that case, the producer will increase the price of the good, so the price will go up. But suppose government offers subsidies here to the producer. What happens? The cost of production reduces, and since the cost of production reduces, the price of the good reduces. So what we do when we move from market price to factor cost, we deduct net indirect taxes. What is net indirect taxes? Net indirect taxes are indirect taxes minus subsidies. Why we deduct subsidies? Because subsidies lowers the price of the good, cost. It reduces cost, it reduces price for the final consumer. But indirect taxes, if excise duty increases, if the tax rate increases, then in that case, what happens? The price of the good will increase because the cost of production increases. That's why we add indirect taxes and we deduct subsidies. So you remember all these three golden rules? Okay. So Surbhi and Prema, I'm Dr. Neelam Tandon. So please do not address me as sir. Okay. So number one. Number two, I've already shared three concepts. I'm sharing once again with all of you. What are the three concepts? Let me erase this and share once again. Because if I'm proceeding, then in that case, you should be very thorough with the basic concepts of national income accounting. Then you can do any conversion, any numerical you can solve. That's very important to understand the three golden rules. Okay. So when we say your GDP is, what is GDP? GDP, what you read in the newspapers, is GDP at market price. They write as GDP, so you should take it at market price. But when we are talking about national income, we are talking about NNP at factor cost. Okay, so national income is NNP at factor cost, and GDP, what you read is about, depicts about growth. The country is talking about growth, GDP is increasing, GDP growth rate is increasing, that is about GDP. National income of a country is measured as NNP at factor cost. Now you see, when we are talking about GDP, MP to NNP at factor cost, what's the difference you find? We are going from gross to net. I'll take different color. We are going from gross to net. Gross to net means when you go from gross to net, you deduct depreciation. What is depreciation? Depreciation is consumption of fixed capital. What is fixed capital? Fixed capital are your investments in machines, equipments, which are fixed over a period of time. These machines and equipments, when you use over a period of time, the value deteriorates. Thus, deterioration in the value, we adjust over the life cycle of the machine and equipment. That is known as depreciation. Okay, so when you go from gross to net, what you do? You deduct depreciation. When you go from net to gross, you add depreciation. That's one difference. So G to N, that's clear. Number 2, I'll take another color. So if we go from domestic if we go from domestic to national, if you go from domestic to national, what you have to do? Domestic to national. When you go from domestic to national, that means you are talking within the domestic territory, you are talking with respect to India's transaction with the rest of the world. So when you're talking about domestic territory, that means you're not including Indian players, Infosys having its venture in US. But you're taking here what? You're taking Amazon having its business in India. That is domestic. When you talk about national, you're taking Infosys business in US. What proceeds, they bring it back home. So that is factor income from abroad. Amazon gaining profits in India, taking it back home to their countries minus. That is factor income paid to abroad. So that is what we do here. What we do, we take net factor income from abroad. Net factor income from abroad means factor income, what we receive from abroad. What is factor income? Factor income is income of factors of production. What are factors of production? Factors of production are land, labor, capital, and entrepreneur. Land gets what? Land gets rent. Labor gets what? Wages. Capital gets what? Profit. Sorry, interest. And entrepreneur gets what? Profit. These are factors of factor income. These are factors of production. Land, labor, capital, and entrepreneur are factors of production because they help in production process. And for using these factors, you have to pay them. And what you give them back is known as their income. So land gets rent, labor gets wages and salaries, capital gets interest, and entrepreneur for taking this, running this venture gets profit. So Indian players gaining profit from abroad is plus. Foreign players gaining profit in India, they take it back home is minus. Indian companies, Indian workers working abroad, bringing money back home is plus. Foreigners working in India, taking it back home, their country is minus. Indian companies investing abroad in terms of buying machines, equipment, land, that is when they go for getting returns is plus. Foreign players investing in India like Amazon, Samsung have established in India, they take it back home is minus. So that is net factor income from abroad. So when you move from domestic to national, what you do? You add net factor income from abroad because this is within India. And this is India with respect to rest of the world. That is why we do net factor income from abroad here. So domestic to national, we have converted G to N, that is gross to net. By deducting depreciation, you can go vice versa by adding. When you go from domestic to national, what you do? You add NFIA, net factor income from abroad. If you go from national to domestic, you deduct NFIA. Yes, because you are moving from domestic plus international to domestic territory. Then market price to factor cost. How do you get from market price to factor cost? What you have to do? You have to deduct net indirect taxes. What is net indirect taxes? Net indirect taxes are indirect taxes minus subsidies. Why we add indirect taxes? Why we deduct subsidies? Because indirect taxes increases the price of the good, which a producer passes on to a consumer by increasing the price. Subsidies reduces the price of the good, and that is why the cost of production reduces and the producer passes on to the consumer by reducing the price. That's why we deduct subsidies, we add net indirect taxes. Okay. So this is what we had done, and you should remember this all throughout. Now we had shared the market price and factor cost. 2011 and 12 prices we have started adopting. That is our base here. So you can see over here, this is the gross value added at basic price. And we had shared product indirect taxes and product subsidies. What is the difference between production tax and product tax? Production taxes and product tax. Product taxes, tax specific to the product. And this is based on the volume of the product. But when we talk about production tax, it is about property tax, other taxes which are fixed. So these are license fee and other things. These are all production taxes, okay? So product tax is added in the basic price. And product subsidies. What is the difference between production subsidies and product subsidies? Production subsidies are subsidies which are offered to, for example, I say that MSME sector, subsidies offered. Education sector, subsidies offered. So that is a production subsidy. But when we talk about product subsidies are offered on fertilizers, seeds to farmers, loans to farmers, specific loans to farmers. So these are product subsidies. The subsidies are deducted and taxes are added. That's why you see here, can you see this? So this is what is about here. You can see this A plus B minus C is market price from basic price. How do you get? By adding indirect taxes, deducting subsidies. Okay, so this is what, and who publishes this? This is Ministry of Statistical Program and Implementation, MOSPI. Ministry of Statistical Program and Implementation is the body which publishes this, and the documents and all are managed by CSO, that is Central Statistical Organization. Okay, so national income account data is maintained by Central Statistical Organization, and this is Ministry of Statistical Program and Implementation, which has compiled this data. You can see here, stats and program implementation. Okay. Emphasis means to give more importance to a particular thing. Emphasis, okay. Okay, so here we are talking about NNP at factor cost with respect to NNP at factor cost. I've already told you with respect to GDP at market price. We have done the conversion. You will follow this all throughout. We have done this, okay? So you can convert now NNP at factor cost to NDP, NDP at factor cost to NDP at market price, and how to get GDP at market price. So I'm not sharing this because we already discussed this. I hope it is clear to all of you. Now, this is the question which was there in one of your papers. You can see here. What is given to you? They have given GDP at market price. Okay, so GDP at market price is given to you. This is given to you. What is they're asking for? They're asking for depreciation. Net factor income from abroad is given to you. Indirect taxes are given, subsidies are given, national income is given. Can you calculate depreciation here? How will you follow depreciation? What will be the answer for depreciation? Anyone? You people want to calculate? Just try from your end. What is given to you? They have given GDP, they have given NNP at factor cost. We have done 3 rules of conversions. You have to calculate depreciation here. So what is given to you? They have given you GDP at market price. They have given you NNP at factor cost. What we need to do, we have to find out depreciation. That means we need to have these two on a common level, except this N we can leave it as it is. So what we need to do, we have to go from GDP to NDP at market price. How will you go from GDP to NDP at market price from this component, NNP at factor cost? So you have to go from NNP at factor cost to NDP at market price. How will you go? This is not going to change, so forget about this. This is N, we want to go to domestic. National to domestic. How will you go from national to domestic? You will add net factor income from abroad. That means you are moving from, national to domestic, you will deduct. You will deduct this. You are moving from national to domestic, you will deduct. Then what are you doing next? You are going from factor cost to market price. Factor cost to market price means you will add indirect taxes. You will deduct subsidies. What's the answer? Okay, you've got the answer. Let's see. Answer is 29190. Just check your answer. Because here we have to get depreciation. So what is the value of depreciation you've got? This is the answer. Check here. Just check some mistake you have done. Kavya, it is not 29956, it is 29190. Because GDP at market price is given, and NP at factor cost is given to you. This is given to you. NNP at factor cost is given to you. We have deducted an FIA. We have added net indirect taxes, and depreciation you have to calculate. So the difference of these two will give you this figure. Check again. Please do calculate. All of you calculate this. This should be your answer. 29190 crores is depreciation. How did we get? What we simply did. You remember 3 rules, golden rules. What we did, 3 golden rules. You have been given GDP at market price. We are going from GDP at market price to NNP. From an NNP at factor cost is given. We have to convert this. We have to convert NNP at factor cost to NDP at market price so that you can calculate the difference between gross and net. Obviously, gross and net difference is what? Depreciation. So you'll get depreciation. So for that, what you have to do? You have to convert this NNP at factor cost to NDP at market price. What we'll do? You will deduct net factor income from abroad 1. Minus minus will become plus, and this will be plus, this will be minus. Whatever value you get through this, deduct from this. You will get the answer as 2910. Yes, Prithvi has got right answer. Good, good. Yes, okay. Surbi has decided today to call me sir only. I don't know, she's annoyed or whatever, what's wrong with her. Okay, so the next question here is, you can see here about subsidies. Now they're asking you to calculate subsidies. So what is given to you? They have given you GDP at market price. They've given you indirect taxes. They've given you GDP at factor cost. Now, since they have given you GDP, we have done, when you have to go from GDP at market price, and they've given you GDP at factor cost. They're asking you to calculate subsidies. So basic difference here, you know, market price to factor cost. What's the difference when you go from here to here? Net indirect taxes. This net indirect taxes has 2 components, indirect taxes and subsidies. This is given to you, this is given to you, this is given to you. You can find out subsidies. Okay, so this is clear to all of you. Subsidies, how to find out subsidies. So what will be your formula for this? You will take GDP at market price on the left side and GDP at factor cost on the right side. And then you will go for finding. So your equation will be something like that. GDP at market price is equal to GDP at factor cost plus net indirect taxes. Or you can write GDP at market price is equal to GDP at factor cost plus indirect taxes minus subsidies. This you know, this you know, this you know, you will get this. Okay, so this is how you do it. Next question. Next is about you have to find out personal income and personal disposable income. Personal income and personal disposable income. So personal income and personal disposable income, what is the difference between the two? We have last class done private income, and personal disposable income. And I had shared some questions also with you people to work on. So if you have to do personal income, that means it is income to household. Now, how will you go for it? So this is the national income. National income, you know, is NNP at factor cost. This is whose income? Undistributed profit, you understand? The part of profit which is not passed on by the corporate to the investors, those who have invested their money in that. So undistributed profit ideally should reach to these people, no, to those who have invested, but they're not getting. So we deduct undistributed profit. So you reduce undistributed profits. This is minus. Net interest made by household, that is again minus, because they have paid for this. Corporate tax is also minus. Transfer payments to households will be plus. What do you mean by transfer payments? Transfer payments are payments which are one-way transaction. You are getting paid without rendering services. This is not included in national income, but this is included in personal income. Okay, so transfer payments to the household from firms will be positive and government will be positive. But so this is what you have to do. So the answer you will be getting 1795 crores if you have done it. Okay, you want me to enlarge the screen. I hope it is okay now. Can you see now? What are non-tax payments? Non-tax payments are payments which are something like you have some non-tax liability. So for example, this comes later when we talk about personal disposable income, but since you've asked, I'm sharing. So once you've got personal income, you have to go to personal disposable income. To personal disposable income is you deduct your personal income tax and non-tax. What is non-tax payments? Non-tax payments are payments which you are liable to pay. For example, I say that you have received income of, let's say, 5,000. Okay, so just an assumption, you have received income of 5,000 rupees, and out of that 5,000 rupees, you're liable to pay 1,000 rupees as tax. So 4,000 rupees. And out of these 4,000 rupees, let's say you had taken some money from your friend or somebody, you're liable to pay them back, or there are other some liabilities on your head for which you have to pay. So that is all your interest payments and others which you have to pay. So all those things which you pay after deducting those payments, let's say that is 800 rupees. So 1,800 rupees gone from 5,000 rupees, and the remaining amount is your personal disposable income. So that is non-tax payments. Okay, so this is the concept. I hope you will be able to calculate personal income and personal disposable income. Then the next is net national disposable income. The way we did it for personal disposable income, similarly, nation can have disposable income. So when we talk about nation, country like India, what will be its disposable income? What country is earning over and above what it gets from rest of the world. So net taxes, wealth received from abroad. So what you get in terms of from abroad, that is about your added up in your country's disposable income, and net social contributions. So for example, World Bank giving you a specific amount of money for development of basic infrastructure for rural India and others. So that gives add-on income in government's kit. They can spend that money. So that is known as net national disposable income, which country has for either for consumption or for further investment. That is disposable income. So like households have, similarly, country can also have net national disposable income. Net means deducting depreciation. Depreciation, is consumption of fixed capital. So that is the difference between gross national disposable income and net national disposable income. I don't know what is this going on here. This girl, Surbi, is writing something which is totally different, and I'm not appreciating the way she's behaving. Okay, so next we are sharing the circular flow. Okay, circular flow. Because there are three ways of calculating national income in a country. Three ways of calculating national income. One is production way. You go for production of goods and services. So you go for production of goods and services. That is one way. How much goods and services are produced in the country? That is one way of calculating national income. Other is how people are spending, expenditure method. That is second way. How people are consuming, where people are spending, how people are investing. That's about the second way. Third way is how much income is generated in the country. The third is income generation. So these are three ways of calculating national income in the country. And ideally, the income which is calculated by one of the methods should be equal to the other method. And why this circle, you can see the connecting links here. This is known as circular flow of income, because you see that if, let's say, farmer producing wheat. So if farmer is producing wheat in agriculture sector, this is creating demand in the manufacturing sector. The manufacturing sector will use wheat to produce something. And once this is produced, this will be those who are producing, they will be getting some income because they are working. So they get income. And they are producing, they are manufacturing because some people want to spend money on and buy it. So they are spending to buy these goods. So wheat is produced because manufacturing sector needs to make something from it. And since why they are making? Because consumers, they want to buy that. And since they are making, they'll generate income for the set of people, those who will be working on this. So this is a circular flow. If production is happening, it's happening because consumers are spending. If consumers are spending, that means it is creating income for the factors of production. So this is a circular model adopted in a three-sector economy: production, expenditure, and income. You can go from income to expenditure and production. Okay. So this is the concept of circular flow of income by taking three components here. Okay, so now we are sharing the next concept of three methods which I have shared with you people. Hello?
Yeah, Neela madam, good evening.
Just 1 second. I believe this is call from. Okay, so this is what is about. you can see here, there are three ways to calculate. One is about value added method through production. So when we go for a value added method, you can see here, it is the sum of all the producing enterprises of the country. For example, I say that value which is added at each step from the farm to the manufacturing to the service sector. That is about value added. We will be sharing related to that later. Then the next is income generated. Income generated in all the three sectors of the economy. Maybe agriculture, maybe manufacturing, maybe service sector, all three sectors. And then we talk about disposition or expenditure method. Expenditure method where people spend. People spend on goods, people spend, consumers they spend, government spends, then corporate they spend. So this is about the expenditure method. So there are three methods of calculating national income. Okay. Okay. So now what we are discussing next is about this is gross value added. Value of output minus intermediate consumption. Value of output, let's say that okay, let's say that it is a farmhouse, it is a farmer or agriculture producer. So the fellow is producing 100 units of wheat. Okay, 100 units of wheat. So the sales is about what? This is sales in the agriculture sector. Sales means output, whatever is the output produced into price. So sales is 100, that will be equal to 100 units into price, let's say 20 rupees. So 100 into 20, that is sales. Sales will be how much? 2000. That is sales. Value of output, isn't it? Value of output is output produced by the price per unit. When you multiply these two, you get sales figure. This is sales, value of output. What is change in stock? Change in stock is what the farmer had last year or in the previous and what value he or she has added over the period of time. Let's say the value added is, let's say 40 rupees or 40 units of rupees of goods worth added here. So this value becomes how much? 2040. That is about change in stock. With respect to last, change in stock is closing stock minus opening stock. So that is change in stock with respect to prior and the current. How much is left? That's about change in stock. Minus intermediate consumption. What is intermediate consumption? For this wheat production, a farmer may had used fertilizers, some seeds, irrigation, some cost on irrigation. That is all intermediary because the price only here you are taking of wheat. So the components used here, fertilizers, seeds, are all intermediate consumption. So you have to deduct the cost of intermediate consumption. That is known as gross value added for agriculture. Similarly, you'll calculate for manufacturing, then you'll calculate for services. You add up all these, you get gross value added at market price. Relative income of factor owners. Relative income of factor owners, from where you have picked up this relative income of factor owners. Relative income of factor owners, we will be sharing at a later point where it is referred to, or you can write in question box that which component you're referring here to. So this is clear to all of you, net value added or gross value added in terms of, okay. So the next we are talking here about with respect to value added method, income method, and final expenditure. So value added method here is you add up the production. I'll share one example that will make you easy to understand. So let's go for one calculation here. Let me see if I can find some numerical based on this national income. Yeah, so what you do here, we take value of output in all the three sectors. Let's say I'll give you one example to understand this. Okay, so let's say that this is agriculture sector production. So value of agriculture sector, okay. Then this is manufacturing sector, and this is tertiary sector, that is service sector. Okay, so these are the three sectors in any economy. Now, agriculture sector, whatever is the value added. What is value added? Value of output minus intermediate consumption. What is value of output? Value of output is sales plus change in stock. What is sales? Sales is price into quantity. Change in stock is closing stock minus opening stock. Okay, that is change in stock. The way you calculate this for agriculture sector, similarly you calculate for the manufacturing sector, then you calculate for service sector. You add up all these three together, then you get gross value added at market price. This is also known as GDP at market price, value added method. Okay, you get GDP at market price. Gross value added at market price once again. Yes, I'll explain you once again. Okay, so gross value added basically, let's take one example once again. A baker producing 100 units of cookies at the price of 10 each. Okay, this baker is able to produce 100 units of cookies because he or she has got wheat, sugar, and other basic goods from farm. This is in agriculture sector. This cookies which are made is made in where? These are made in manufacturing sector. Once the cookies are made, then they will be sold in the market at some bakery shop, and they will go for marketing of this. That is about services sector, marketing and distribution and others. From wheat, agriculture to manufacturing cookies, the value added, let's say it was costing 80 rupees here. When it had gone to here, it cost him or her, this is 800 rupees, this is costing 1000 rupees. So the value added here is 800 minus 1000 is 200 is value added from agriculture to manufacturing. And from 1000 rupees to, let's say, here on the retail showroom, the fellow sells at, let's say, 1200. So the value added here is 200. So the value added at each step in each sector of the country is added up together, and the sum you get is the total value added. And this we do it for three sectors. Which are the three sectors? Agriculture. I'll share with one example with you. Agriculture, then followed. Agriculture is not only agriculture. It includes agriculture, fishing, mining, quarrying. Everything is included here. Right from the natural resources, what you get. So that is one. Primary. This is known as primary sector. Followed by secondary sector. Secondary sector is about manufacturing. Manufacturing includes everything. small manufacturing firms, big manufacturing firms. Okay, so everything is included here, followed by tertiary sector. Tertiary sector is service sector. What is the value added here with respect to this? To respect to this is all added together. When you sum it up, you get GDP or gross value added at market price. Okay. Intermediate consumption basically is about consumption. So for example, this bakery shop user making cookies, what in this cookies she's putting sugar. Okay, so sugar is intermediate good. Sugar is intermediate good, and this because when the baker is going to sell cookies to the third person, to a retailer, then definitely in that price of cookies, sugar price is included. So sugar is not used as a final good by a consumer who is buying cookies. Sugar is a part of production process of cookies. So the intermediate good is a part of production process which helps in the final good, production of the final good. So these are intermediate goods. So for example, when we say about farmer using fertilizers, fertilizers are part of the growth of the product, farm product. But you buy a final product. So intermediate goods are the goods which are used for further production process, which are not consumed. But final goods are the goods which are consumed or further invested. That's the difference between intermediate good and final good. Okay, so this is the concept of value added method. Then income method. Income method, when we talk about income method, what are the components of income? So we have shared there are different factors of production. What are the factors of production? Factors of production are land, labor, capital, and entrepreneur. So when we talk about income method of calculating national income, or rather GDP. So when you have to calculate GDP through income method, you have first component as compensation of employees. Compensation of employees means which is the income given to employees for contributing their services. That is compensation of employees. It can be in terms of salary. It can be in terms of kind also. So you can give them cash. You can give them kind. Kind like, for example, CEOs of the company, they get house, they get chauffeur-driven car and all those things. Guard working somewhere, they get uniform, they get tea in a day and everything. That is in kind. And cash is the salary what they get. So that is compensation of employees. Okay, so compensation of employees is about you get salary, cash, and in kind. That is compensation of employees given to employees. Then rent. Rent is income of whose? Land. Interest is income of capital. Profit is income of entrepreneur. And mixed income. What is mixed income? So you are going to be chartered accountant. So you are a chartered accountant. You want to practice your own. So you're not going to segregate your income in terms of how much I have gone for my office, how much I am going for this PC, how much I'm paying to only few segregations you'll have, but you will not go for segregating your income in different heads, like the way the corporate, they do rent, interest, profit, and other. So mixed income people, they do not go for segregation of their income. These are normally self-employed people. So doctors practicing their own, lawyers practicing their own, they do not maintain their different books. They maintain common account of theirs. So that is known as mixed income. So mixed income is one of the parameters. So people, those who are not categorizing their income in different heads and they are self-employed, they are categorized in the category of mixed income for a country. Then consumption of fixed capital. What is consumption of fixed capital? You know, consumption of fixed capital is depreciation. So that is included, and indirect taxes, which is again included. So you get GDP. Why do we add consumption of fixed capital here? in income method. And this, because through income method, what do you get? Through income method, you get NDP at factor cost. Please do remember, through income method, you get NDP at factor cost. What is income method? Income method is compensation of employees plus rent, interest, profit, plus mixed income. If you sum up all these, you get NDP at factor cost. This is what you get through income method. Now, if you have to go to GDP at market price, how will you go to GDP at market price from NDP at factor cost? You're going from net to gross. Net to gross means what will you add? You will add depreciation. What is depreciation? Depreciation is consumption of fixed capital. When you go from factor cost to market price, what you have to add? You have to add net indirect taxes. This is indirect taxes minus subsidy. Then you get GDP at market price. Is it clear? Yeah, absolutely. Absolutely. Tires and mirrors are. Yeah. You're right. Tires, mirrors are intermediate good used for making cars as final good. Yes. So this is about the concept of national income by income method. So please do remember two things. Through output method, that is value added method, you get GDP at market price. How do you get GDP at market price? By calculating value of output minus intermediate consumption of primary sector plus value of output minus intermediate consumption of secondary sector plus value of output minus intermediate consumption of tertiary sector. When you add up all these three, you get GDP at market price, which is also known as gross value added at market price through production method. That is value added method. In value added method, we deduct intermediate consumption from value of output. Why we deduct? Because intermediate consumption is already included in the production process. It is not used for final consumption or investment. Income method, you get what? Through income method, you get NDP at factor cost. What is NDP at factor cost? That is net domestic product at factor cost, which you get by taking three core components. One is about employees. Employees get what? Compensation of employees. They can get salary in cash, they may get in kind. They may also get employees' contribution. So some organizations, they offer PPF, isn't it? 11% given by employer and 11% given by employee, and so on. Different ways they go for contributing. So this is known as employer's contribution. So that is also part of salary. So this is also included in compensation of employees, followed by rent, interest, profit, and mixed income. If you add up all these three, you get what? You get NDP at factor cost. To get GDP at market price, what you do? What you do to get market price, you have to add indirect taxes, you have to deduct subsidies. So you get GDP at market price. Okay, is it clear? Now the third method is expenditure method. Expenditure method basically is about what? Who all consume? You see who all consume. This is basically about consumption. So who all are consuming? We are consuming. Where do we consume? We consume goods and services. So one component is consumption expenditure. By whom? By consumers. They may spend on goods, you may spend on services. You may spend on durable goods, you may spend on semi-durable goods, you may spend on perishable goods and services. So this is how. For consumption. Who else is spending? Government is spending. Where the government is spending on defense, government is spending on infrastructure, government is spending on administrative expenses. So that is government expenses. So government is spending on consumption also, government is spending on investment also. Consumers are spending on consumption also, consumers are spending on real estate also and other things also. So we are spending on residential property and other things also. So that is investment. So we are consuming also, we are investing also. Similarly, government is also consuming, government is also investing. Then we have net exports. Net exports, what is net exports? Exports which are export minus imports, that is net exports. So what is net exports here? Net exports are exports minus imports. Okay, that is net exports. When we talk about net exports, that means if, so for example, China, you say China's exports is more than imports, so this will be plus for them. But when we say about India, India's scenario is changing over the period of time, but our imports are more than exports, so this will be minus, isn't it? Because our import exceeds our exports, so this will become minus. So what is expenditure method? Expenditure method is private final consumption expenditure. Private final consumption expenditure followed by what else? Then you have government final consumption expenditure. Then you have gross domestic capital formation. So firms are also there, no? Firms are also going for investments. So firms, what they invest is about gross domestic fixed capital formation. And then you get GDP at market price. Okay? So GDP at market price, you get GDP at market price, and then you can calculate national income for the country. National income, you know, GDP is what? GDP is at GDP at market price. To get national income, what do you have to do? National income is NNP at factor cost. You know, once you get GDP, you know how to go to NNP at factor cost. Okay, so you will be able to do it. So these are the three methods. So what we have shared till now, we have shared that for income, calculation of national income, there are three methods which are used. Government spending on education also. Yes, absolutely right, Jaspreet. Government is spending on education also. So the government spending on different parameters, which is about one of the components. So anyways, so the three methods of calculating national income is, one is by the value-added method. Value-added method is production of goods and services in all the three sectors, deducting all intermediate consumption. That gives you value-added method. Second is, what you get through this? You get GDP at market price. This you always remember. Through value-added method, you get what? GDP at market price. Through income method, what do you get? Through income method, you get NDP at factor cost. Please do remember. Through income method, you get NDP at factor cost. And through expenditure method, what do you get? Get GDP at market price. So through output method, you get GDP at market price. Through expenditure method, you get GDP at market price. But through income method, you get NDP at factor cost. Please do remember this always. Okay, and national income is NNP at factor cost. Okay, so this is clear. So let's look for some components here. Value-added method, we have shared value-added method. So what is included in value-added method? You also include own account production of fixed assets by government. So government going for constructing hospitals, government going for, this is expenses, no, but they're constructing those things for a sustainability of people, enterprises and other. So enterprises also go for some basic structure of there where they invest in that, in construction of buildings, corporate offices, basic infrastructure. So this is also for their own use. We will also buy house, that is also for our own. So that is also included in value-added method. Okay. Then imputed value. What is imputed value? Imputed value is that, let's say that I'm a farmer, I'm producing wheat. Okay. And that wheat, I'm using it for my self-consumption. So what will be the imputed value of that production of that wheat? If that, let's say 10 kgs of wheat, in the market, it is it's going to cost at 100 rupees. And that farmer is, just a hypothetical example, you don't get 10 kgs of wheat at 100 rupees, just an example, okay? So if we say let's go for more realistic example, 1 kg of wheat for 100 rupees, let's say. So 1 kg of wheat for 100 rupees. So this farmer is using 1 kg of wheat, producing and consuming self, okay? But if this farmer would have gone for selling it in the market, the fellow would have got 100 rupees. So this 100 rupees, this rupees 100, which this farmer is not getting because the fellow is going for self-consumption, is known as imputed value. Okay, so imputed value is added in the value-added method. Own account production of fixed assets is included in value-added method. Imputed rent, so you have your own house. When you calculate, but if you would have given it on rent, so you could have got rent of 50,000. That is imputed rent of owner-occupied house. So that is also included. Change in stock we have already shared. Inventory you understand. Closing stock minus opening stock. So let's say in the month of March, Feb stock was with you 200 units. So the opening stock is 200 units, and by the end of the month, remaining stock is 100. So the total change in stock is 100 units left with you. That is change in stock, opening minus closing stock. That's about change in stock. So these are the components which are included in output method, that is value-added method. Do keep it in mind, okay? So but other important factors which you have to remember is that in income method, what is not included in income method? So when we say income method is you have one lottery ticket. So that's your one windfall gain, but you have not worked all throughout for that, isn't it? So that is not included in national income. Then transfer income is not included. What is transfer income? We have already shared. Transfer income is some subsidies you're getting, some allowances you're getting. So these are not included in national, because these are which kind of payments? These are transfer payments, unilateral payments, where you have not contributed as such, no? So they are not included. Then you go for selling second-hand goods. So you have a car and you go for selling it in the market today. So that was already included in the year when it was produced. So second-hand cars will not be included. The price will not be included. But the car brokerage, which has been charged by the car, which is selling second-hand cars, his or her income will be included. So are you getting it here? So the second-hand car will not be included, but the brokerage which is paid to that person who has connected between the one who wants to sell the car and who wants to buy the car will be included it, because that's the income, no? That's the income, so that will be included, okay? So commission brokerages will be included. This I've already shared with you people. Imputed value of services will also be included, of production units. Whatever goods you have produced for self-consumption will be included as imputed value. Absolutely, just breathe. That's right. Okay. So we have already shared, this is income method. Income method, what do you do? In income method, what do you get? You get NDP at factor cost. This is not NNP. This should be NDP at factor cost. You get NDP at factor cost in income method, which comprises of compensation of employees, operating surplus. What is operating surplus? Operating surplus is rent, interest, and profit. Rent, interest, and profit, when you sum it up, that gives you operating surplus, then mixed income. You get what? You get NDP at factor cost. This is income method. Okay. So we add wages, we add salary, we add bonus, we add dearness allowance, we add commission, we add employees' contribution to provident fund, we add imputed value of compensation in kind, what you get in kind. Okay. So rent, we include actual and imputed rent. We include royalty given to people, interest on loans given on productive services, dividends you receive, undistributed profits of corporates, which you ideally should come to you, but they are not giving you. That's also your income. Okay. So pension of retired people are not included in national income because post-retirement, this is part of expenses of the firm. No, that's not your income because you are not contributing now. You had contributed, you were paid over the period of time. But since you're retired now, you're getting pension after retirement, then in that case, it's not included in your income because that is part of expenses which can be there. Expenses, but not the part of income. Okay. Yeah, you have to. Windfall profits, Komal, windfall profits are sudden gain, you gain through lottery or some instant gain you gain through that windfall gains, windfall profits. All of a sudden you gain huge quantum of money, but for that you may not have contributed. So that is known as windfall gains. Okay. So profit profit again has three components. I'm sorry. What are the three components of profit? Profit has three components. That is corporate tax. Just give me 1 minute. See, profit can further be fragmented in three components. Because profit of a company, they pay tax, they pay from where? They pay from their corporate earnings, profits only. So that is a corporate tax. So corporate tax is a part of profit. Then retained earnings. What about retained earnings? Retained earnings are the part of profit which a firm is not paying in the form of dividend. It's retaining it, maybe for further growth. Okay, so that's also part of profit. Third component is dividend. You know, dividends are given by firm from their profit component only. So profit can have three components: corporate tax, retained earnings, and dividend. So is it clear to all of you? That's about corporate tax, retained earnings. So do remember, if profit is also given in a question and they have also given corporate tax, retained earnings, so you ignore these components because profit includes corporate tax and retained earnings. So sometimes it happens they give you to confuse you. Examiner may give you to confuse you. Along with the profit, they have given you retained earnings and dividend also. So you should be able to understand that profit has all the three components. If profit as such is not given, then in that case, you need to add all these three components to get profit. And why do we need profit? We need profit for which method? Income method. Because you know, income method has how many components? Compensation of employees, rent, interest, and profit, plus mixed income, isn't it? So profit comprises of these three components. Pension or transfer payments, yes. Yes, Pooja, we had calculated GDP at market price in income method. We had moved from NDP at factor cost to GDP at market price. And for what we did, we added depreciation and we added net indirect taxes. That is how we moved from NDP at factor cost to GDP at market price. So the end outcome in each method was given GDP at market price. But please do remember, in income method, you get NDP at factor cost. To reach to GDP at market price, what you need to do, you have to add depreciation and you have to add net indirect taxes. So that is what you can see here. Can you see here? In the income method, they have added consumption of fixed capital, they have added indirect taxes, and they have deducted subsidies. What is some example of corporate tax? Rashmi, corporate tax is the amount of money which companies, it is quoted as corporate tax only, my dear. Corporate tax paid by, let's say, for example, TCS. Okay, so TCS profit in the financial year is, let's say, 100 crores. And if the corporate tax is 22%. So profit will, from the profit only, 22% of the profit will be paid tax to the government. That is known as corporate tax. Okay, so this is clear, Kashmi? Corporate tax. Okay, so we have done profits, we have done. Now this is the question given to you. And they are asking you here, what is the question? They're asking you here, they're asking you to calculate national income and personal income. So you have to calculate national income and personal income from this. You know national income. What is national income? National income is NNP at factor cost. Is national income. Now you look at the what is given to you. They have given net national product at market price. What is this? This is they have given you NDP at market price is given. You have to go to NNP at factor cost. You know how to go from NDP to NNP at factor cost. You have to convert D to N. How you convert D to N? Domestic to national, what do? You add NFIA. From market price to factor cost, how do you go from market price to factor cost? You deduct net indirect taxes. You will get NNP at factor cost. Okay, so you will get NNP at factor cost. Once you get NNP at factor cost, that's your national income. So what do you have to do? From 1891, from this, you have to deduct NFIA. Where is NFIA? Net national product. Okay, sorry, I'm sorry. This is NNP. This is given NNP. If this is given NNP, that means NFIA is already taken care. Only thing you have to deduct net indirect taxes. So indirect taxes is 175 plus minus 30. From this, you will get what? National income. So what's the figure of national income? When IT and subsidies are added and subtracted. Kavya, when you move from market price to factor cost, market price is for whom? For consumers. Factor cost is for whom? For producers. So what you have to do if you go from market, so which price will be higher? Obviously market price will be higher. Why? Because when you go from factor cost to market price, you have to add net indirect taxes. When you go from market price to factor, you deduct net indirect taxes. Is it clear, Kavya? Answer, Jasprit is saying 1746. Absolutely right. Absolutely right, Jasprit. It is 1746 crore. And what about personal income? How do you calculate personal income? You have got national income. From national income, you have to deduct income accruing to the government. So the income accruing to the government is given here. So this is the income of the government. So you can see here income of the government. Income of the government is given. This is the income of the government. So this you will minus because this is not personal income. This is government income. So you deduct this. Then savings of non-departmental enterprise is also to be deducted. So this is how much? This 10. This is also minus. Why we deduct? What do you mean by savings of non-departmental enterprises? So government has departments. Different departments are there. Government have non-departmental, like government has SAIL, government have GAIL, government is having ONGC. So these are all non-departmental. But government has departments like MTNL, government has department like telecom, government has department like railways, government has department like roadways. So these are different departments. So income government getting it from property and entrepreneurship. One is from the administrative departments and non-departmental, savings of non-departmental. So this is also government income. So you will deduct this. Then interest on national debt will be plus because you are getting. So you have lended some money to the government, you have invested in some government bonds and others, you get returns, interest on that, so that is plus for you. Transfers are all plus because transfer payments are included in personal income. Current transfer from rest of the world is also plus. Savings of private corporate tax sector will be minus because ideally they have to pay, but they are not paying it to you, so it is minus. Corporate profit tax is also minus because they are not paying it to you. So this is how you do. So you get personal income. Yes, Rashmi, absolutely right. Absolutely right. Okay, so Jasprit has got answer for this also. 1711. No, Jasprit, it is 1711. So interest on national debt to be added, all current transfers to be added, corporate tax and savings of private corporate to be deducted. So the answer will be 1711 crore. Some mistake you did. Just recheck again. Okay, so this is what is about personal income. I hope you understand. So personal income, basically what you have to do from national income, income accruing to all government has to be deducted. Okay, so income accruing to government from any source to be deducted. Income from property, entrepreneurship to government to be deducted. Savings of government to be deducted, non-department. Interest on national debt. What is interest on national debt means? It means that the government has issued bonds and you have invested in those bonds and you are getting interest on that. So that is interest on national debt. So what you get in return is plus. Current transfers from rest of the world. So current transfers from the rest of the world, what you get from rest of the world, any kind of transfer payments is all plus. And current transfer to government also giving you some benefits, that is also plus, but for which you are not contributing. So current transfer from rest of the world is also plus, and from government is also plus. But corporate taxes is minus, savings of private corporate tax is minus. Reason being, they are not paying it to you. They are paying it to the government. Though you deserve it because you have invested your money, but it goes to government. So that is why you get less. That's why it is minus. And certain percentage they save. That's why they're not passing it on. That's also minus. Okay. So this is the concept of. Now the next question is this. You have been given NDP, what you have to calculate. You have to calculate NNP at market price. To calculate and disposable personal income. NNP at market price. You have been given NDP at factor cost. What is given to you? You have been given NDP at factor cost. And they're asking you NNP at market price. How will you get NNP at market price? You have to convert this D to N and factor cost to market price. So Kavya, now you understand when we go from factor cost to market price, what we have to do? We have to add net indirect taxes. And from domestic to national, we have to add NFIA. This will give you national NNP at market price. So get NNP at market price. That's the first part of the question. What's the answer? And then you can calculate personal disposable income. Personal disposable income. How do you get personal disposable income? You get NDP at factor cost. You take NNP at factor cost. From that, you deduct income from domestic accruing to the government because that's government income. That is not your income. That is deducted. Interest on national debt will be added because you get transfer payments from government will be added because you are getting it. Net private donations from abroad will be added because you are receiving it. Then and next is indirect taxes to be deducted because you have to pay for that. Here they have given subsidies, direct taxes you will be deducting, and subsidies and indirect tax, direct taxes you will be reducing because that's the part which you pay. So your net income will be less. The personal disposable income will reduce. So this is how you get. So this should be the answer. Absolutely, absolutely right. Just absolutely right. NNP at factor cost is 15053 crores. And personal disposable income will be how much? Disposable income, you have national income. National income is your NNP at factor cost. From that, you deduct income accruing to the government, savings of the non-departmental enterprises, the way we did it in the last question, interest on national debt to be added, all current transfers from rest of the world to be added, from government to be added, corporate profit tax to be deducted, and savings of private corporate sector to be deducted. So you will get the answer. So you people are not calculating personal income and personal disposable income, but you're calculating national income. I hope you are able to understand the difference between personal income and personal disposable income. Okay, so we'll take a break and then we can start again after 10 minutes. Yes. Okay. See, there was some confusion regarding the link, and I was not able to see your queries. Only a few students I could see, just Preet and others. Others I could not see, and now I can see Sahil has written n number of times. You should teach personal and disposable income properly. So thank you for giving me instructions, Sahil, that I should teach properly. So I'm sharing once again with you people that what is the difference between personal income and disposable income. This was done in the last class. Maybe you were not there. That's why you are giving such kind of comments. But still, I'll share with you. That is basically disposable income and personal income is about you are moving from national income. We do not have that much time, but still I'm sharing because you have written, I believe, 15 or 16 times the same statement again and again. Okay, so when we talk about disposable national income, you understand when we talk about national income is national income. When we take national income, we are talking about income of the country with respect to net factor income from abroad. I hope national income is clear to all of you. That is NNP at factor cost. When you go from national to private, you are including income. Here it is income of whose? Income of corporate, income of government, income of household, all income and from rest of the world. But we do not include here transfer payments. That you know. When we talk about private income, this is income which is excluding income of the government. Government income. Government gets income from which sources? Government get income from the private sector. That is about their sectorals. Sectorals like we have shared about sectorals like telecom, health, housing, then banking, insurance, other sectors. So sectoral, savings and other things which they go for. And other is non-sectoral. Non-sectoral in terms of NTPC, GAIL, SAIL, ONGC are all non-sectoral. These are not sectoral. This is the source of the government, which should be deducted from private income because this is not the income of the private sector. But in this, we add what we add in this transfer income. Transfer payments from anywhere, what you get is added here. That is private income. Okay, from private income, when you go to personal income, in personal income, you deduct, you basically take care of income where the corporate are not giving you. So the corporate tax we deduct, undistributed profits we deduct. Why we deduct? Because they are not paying you. They are not paying you. They are retaining with themselves private sector. This ideally you should get it, but all transfer payments are included here. Transfer income is included. That's about personal income. So you have deducted here personal. From this you have deducted corporate, which they are liable to pay to you, but they are not paying it to you. That is to be deducted from this, and interest on national debt to be added because that is what you deserve. You have paid. That is added here also. So national interest on national debt is. When you go from personal income to personal disposable income, you deduct tax liabilities of yours and non-tax liabilities of yours. When you deduct this, you get this personal disposable income, which is there for consumption or for savings. That is personal disposable income. So Sahil, I hope I have explained now more as per you wanted to. Disposable income is clear. I hope so. Sahil has written, I don't know how many times. Harshul is saying, ma'am, does it mean Indian citizens' income in US is Indian income? Yes, when they bring it back to India, the part of income which they bring it back to the country in any form, since they are residents. So residents' income is part of national. Residents' income is part of national. Do keep it in mind. If it is a Indian citizen, resident, their income is part of national income. But it is not part of domestic income. Okay. Then I have a doubt in national income chapter, study material page. Basic price is the amount receivable for. We have shared this basic price concept. Mancha, we have shared the concept of basic price. Can you see this? I'll share once again with you basic price. I was not able to see your questions. That is why, because some other link was shared with me. That's why I could not take your queries. Now this is about the basic price. You can see here basic price. If we talk about this, about basic price, gross value added at basic price. In this, production taxes and production subsidies are part of it. Okay, Mancha. But product taxes and product subsidies are not part of it. Basic price. Production taxes and production subsidies are part of it, but product taxes and product subsidies are not part of it. Okay, so is it clear? And then GDP at basic price can be by adding production taxes and deducting production subsidies. And GDP at market price comes into picture by adding product taxes and deducting. Yes, when you talk about market price, it's always about deducting indirect taxes and subsidies. That is how you get market price. So that's why A plus B minus C. That is what we have done. You remember the rule, Ansha? I hope it is clear. What is capital? Capital, Suji, capital is the investments. Investments, what you do. So for example, I say that you start your venture. You are a startup. You start your venture. You put some amount of money in your venture. Okay. So that money of yours, if you would had not invested in your venture and you would had gone for saving somewhere, you would have got certain interest. That is interest. Okay, so capital, on capital you get interest. And Sujal, other possibility is that you are putting your own money which you are foregoing the interest. A second probability is that you have raised from someone. You have raised that money from someone, so you have raised, so you are liable to pay interest on that. So that's about the interest income of capital. Is it clear? I can see answers now, because at that time I was not even, I was wondering what is happening. Okay. So I hope I have cleared Ansha's query. Yes, you are get. Now I'm happy to see that all answers. I was wondering why nobody's answering. Arfin, what is your query? Arfin, can you share again? I'm not getting what was your query, because national disposable income, Shivam, is clear. I hope so. Yes, these questions were asked in previous question papers, Dave. That's why I've included. Yes, yes. Shivam, always you have to write pura formula, complete formula you have to write, because this is not simple mathematics. You are solving plus and minus and you'll get marks. You have to write complete formula. You have to write explanation also to get better marks, to make examiner believe that you know the concept, and that is how you have come to the conclusion. So somehow in number calculation, you may do some mistake or blunder. At least the examiner will know that you know the concept very well. So be very careful about writing each and every component when you solve such numerical. Do not simply go for solving. Sujal, personal income, beta, personal income is simply income जो इनकम कॉर्पोरेट की इनकम से आप माइनस करने के बाद जो आपको मिलती है वो पर्सनल इनकम होती है. ओके, सो नेशनल इनकम इज इनकम जिसमें की इनकम होगी कॉर्पोरेट की, हाउस होल्ड की, गवर्नमेंट की. प्राइवेट इनकम में इनकम होगी कॉर्पोरेट की, हाउस होल्ड की. पर्सनल इनकम में इनकम होगी हाउस होल्ड की. ओके, एंड पर्सनल डिस्पोजेबल इनकम होगी जो कि हाउस होल्ड के पास कंजम्पशन और सेविंग के लिए अवेलेबल होगी आफ्टर उसमें से अगर आप माइनस कर देंगे टैक्सेस और बाकी जो भी आपकी नॉन टैक्स लायबिलिटीज हैं उसके बाद. ओके, सो दैट इज अबाउट. इज इट क्लियर सुजल? Net national income. Net national income is Shruti. Net national income is net national income basically means national income at deducting depreciation. Net national income is national income after taking care about all your liabilities and whatever is the net national income available to you in the country. You have some liabilities to pay, and that is what you deduct all those things plus what you get, that is added, that is your net national income. Disposable income you're talking about, net national disposable income, I hope you are talking about. Too much zoom. Okay, so you want me to reduce. Prior people said that we can't see, that's why I had zoomed it. Okay. Double calculation here. Gross national disposable income, I hope is clear. In all farming equipments, no, Hitesh, farm equipments are part of the final because you equipments, you use it repeatedly, isn't it? So we have shared in the last class, equipments are part of the final goods. You are using those equipments, no? That's why we are deducting depreciation. But if you are using some seed, you are using some fertilizers, you are using basic things for that, which is inherent in the process of the production. That is about intermediate good, okay? The farm equipments are not part of it. I hope personal and personal disposable value added is profit. Value added is difference between value of output minus intermediate consumption. Sujal, it's not just a GST का concept अगर आप समझते हैं, GST में क्या करते हैं आप, input tax credit क्या होता है? Input tax credit is the value added from A to B, isn't it? On that you get input. Similarly here. So sugar can be a final good in sugar making industry. Absolutely. What is capital is clear. 2D GDP clear. Good. Yeah, I'll share. CFC is consumption of fixed capital. Consumption of fixed capital is depreciation. CFC is consumption of fixed capital. Yes, Amritpal, imputed and opportunity cost is same. How corporate tax is a profit? Manisha, corporate tax is not profit. Corporate tax is part of profit which is liable, you are liable to pay because you're gaining profit. That is why it is corporate tax, because you're gaining profit. If you're not gaining profit, you're not liable to pay corporate tax on that amount, no, which is where you're not gaining profit. So since on your profit, you pay corporate tax and that part is not available to investors, those who had put their money in that. For example, I say you have put your money in a Reliance stock. And if their profit is higher and they are liable to pay more corporate tax, then definitely they will not be able to pay you more dividend because they are paying more tax over there, isn't it? So that's why it is deducted, okay? Why capital gain is not included? Capital gain is not included because that's a part of goods produced prior. These financial instruments which were issued prior and they are not included in current. You are simply gaining through the change in the price, but there's no production as such. That's why it is not included, okay? The capital gain, I hope, is clear. Deduct savings of private sector, because they are retaining it with themselves. They are not passing on to the investors. That is what. So if you retain your savings, whatever you have surplus, you do not pass it on, then in that case, it leads to less income generated for the personal income category. So that's why it is minus, okay? Once again, personal and is it clear now? Personal and personal disposable income. Okay. Personal and personal disposable income, I've told you, personal income is income, which is income including all transfer payments, which is income which you should get ideally what you're not getting, plus let's say corporate tax, undistributed profits, then interest on national debt, which is added. So this is personal income. You deduct all income which you should include all income what you should get, and you deduct what you're not getting, ideally what you should get. That is personal income. And from personal to reach to personal disposable income, you deduct taxes and non-tax liabilities to get personal disposable income. So I hope this is clear to all of you. Personal income. Now, in this case, you see personal income. How did we calculate personal income in this case? What we took, what is given to you, NNP at market price is given to you. You have to calculate personal income. How will you get personal income? You get personal income from this NNP. In this, you will deduct what? Government income you will deduct, isn't it? So you deduct Puja. In this, income from the property and entrepreneurship accruing to the government, you will deduct. Then savings of non-departmental you will deduct, because this is of the government income, which is not part of personal income. So you'll deduct this. Then interest on national debt you will get. So that is your income. So it will be added. What is interest on national debt? When you go for buying bonds, on that, the government is liable to pay you interest, or the other bodies are, government is liable to pay you interest. That is your income. So that is added in personal income. Then current transfers from government. Government gives you unilateral transfers, that is added. So any allowances given by government, any benefits given by government is plus. If you get benefits from rest of the world where you are not paying anything else to them, that is again plus. Savings of private corporate sector, which they should ideally give it to you in terms of higher dividends, but they are not giving you, that's why it is minus. Corporate profit tax is also minus because they are not giving it to you, which they could have given it to you, passed on to you. But since they are liable to pay taxes, so they are not able to pay you. So these are all minus. So what you get is personal income. So if from NNP, if you minus from NNP income accruing to the government, savings of non-departmental enterprises, then you add interest on national debt, you add current transfers from government rest of the world, and deduct savings of private corporate sector and corporate. Why we minus this? क्यों minus कर रहे हैं? Because ये आपको मिलेगा नहीं. You are not getting this. That is why you're deducting this. Ideally, you should get it, but you're not getting it. So that's why you deduct it. So this is personal income. Okay, Pooja, I hope it is clear to you now, personal income. And personal disposable income is when you go for deducting tax and non-tax liabilities. Okay, so this is clear. So this is the next question here. What are they asking you to calculate? They're asking you, have you done this? NNP at market price and disposable personal income. So आपको इसमें disposable personal income calculate करना है. How will you get disposable personal? NNP at market price first. NDP at factor cost is given, and you have to calculate NNP at market price. How will you get? You will go from factor cost to market price. You will go from domestic to national. So what will you do? You will add NFIA. NFIA is given to you. This is NFIA. So you will add this. So you will add this NFIA. This NFIA to be added. This is plus in this. So first you get NNP at market price. NNPU market price. How do you get this plus NFIA? And in this, what else you have to do? You have to go from factor cost plus NIT. This will give you NNP at market price. Okay, once you get NNP at market price, then in that case, next is disposable personal income. You have to get personal income. So for personal income, what you have to do? Income accruing to the government will be minus. Interest on national debt will be plus. Transfer payments by government will be plus. Donations from abroad will be plus. Then taxes on corporate profits will be minus. undistributed profits will be minus, and then direct taxes will be minus, subsidies will be plus. This will give you what? Personal disposable income. Anyone has calculated personal disposable income for this question? NNP, national income, is NNP at factor cost, and NDP at factor. National income, when we talk about, is NNP at factor cost. National income is always, Prabhas, national income is always at national. The moment we say national, it has to be NNP at factor cost, isn't it? So it has to be national. When we say national, it is NNP at factor cost. Domestic income is NDP at factor cost. Okay. So national income is NNP at factor cost, Prabhas. It is right. When we say domestic income, then you say NDP at factor cost. Okay. What is Manisha's query? And I'm waiting for you people to answer this question. Anyone has calculated this? I'm waiting for answer for this question. Consumption. In last methods, we already getting gross. Why we need to reach at net? Can you, Surya, I hope income method is clear to you. Income method is basically how to calculate income through factors of production. I'm waiting for this answer, then I'll share. At 8 o'clock, we'll go for sharing all the methods again. Gross national disposable income. So why? I'm not refusing, Harshul, you are not my student. When I said you are not my student, gross national disposable income is income of the country, which is including depreciation, which is including all receipts, what we have got from rest of the world, and what we have paid to the rest of the world, difference of that. The government, this is about transfer payments. So any transfer payment, what government has got from rest of the world, and what transfer payment government has made to rest. For example, we say that government of India has paid something in to support Bhutan. That's minus. But government of India has got support from World Bank, from IMF and other and developed countries during COVID. So that's plus. So this is the income of the country, which is including depreciation, Harshul, which the government can use it for consumption purpose or for investment purpose. That's about gross national disposable income. Okay. So which is including, simple concept आप समझ लीजिए, when we talk about disposable income, we are including all transfer payments. Okay. But national income में आप transfer payments include नहीं करेंगे. Okay. So transfer payments are not included in national income, but all transfer payments are included in personal income, private income, and personal disposable income. Okay. Harshul, are you happy now? I'm not getting answer here. Okay, so nobody has answered this, but if you'll calculate, you will get this. So NNP you will get how much? NNP you will get, calculate kar lijiye, 14,900 plus 80 plus NIT, net indirect taxes. Indirect taxes is 335 and minus subsidies, 262. So this indirect taxes minus subsidies. So basically you have to do here 335 minus 262. Net indirect taxes and NFIA is 80. Sum up kijiye, you will get the answer for NNP at market price. Okay, NNP at market price you have got, and then I've already written plus and minus. You will get personal disposable income. So personal disposable income is national income, that is NNP at factor cost, minus you go for income from property and entrepreneurship accruing to the government, because the government ki income hai, this will not be included in personal income. Savings of non-departmental enterprises, that is again part of government income, which they are saving. So that is also not included in personal income because the government ki income hai. Interest on national debt, because you have got it, that's why it is included. Current transfers include honge because all transfer payments are included in national income. Corporate tax will be deducted because corporates are paying tax from their profit, and because of that, it is not passing on to the investors in terms of dividends. Savings of private corporate sector will also be deducted. So we will get personal income. Personal income में से अगर आप taxes minus कर देंगे and non-tax liabilities minus कर देंगे, you will get personal disposable income. Okay? I cannot get further queries of yours. I really don't know. Have you calculated this? There's some technical issue today. That is why we are facing so much problem. I'm getting 14663. Okay. Yes, 14663 is right. How come you're getting 1476336? Nishita, you have done something wrong, my dear. Some mistake you did. Disposable income, personal income. Personal income, we are talking about personal income. Personal income. Jitin, you have calculated 1473 disposable income. 7636 क्यों आ रहा है आपका 17? Manisha is getting 14663. Just check again once all the values, you check it again. Is something missing over here? Are you getting disposable income? You are getting, Ankur is getting 14, Prashali is getting 14763. कुछ miss कर रहे हैं आप लोग. You're missing something. Just check again. In this, income from this to be deducted, NNP at factor cost, you go from NNP at factor cost, okay? Not at market price. NNP at factor cost. From NNP at factor cost, you have to go. From NNP at factor cost. Just check. Did you go? Because national income kya hai? NNP at factor cost. Are you going from NNP at market price? Those who have got this answer, are you going, Ankur? Rakshali, are you going from NNP at market price? आप NNP at factor cost से जाइए, NNP at factor cost to personal disposable income, not from NNP at market price, okay? Maybe that is why you're getting wrong. Nishita, just check once. Have you calculated from undistributed profit? Undistributed profit is the part of the profit, Kaveri, which a firm is not. So, for example, I say that I'm a company, I have earned 400 rupees, 400 crore rupees profit. And out of that, I have paid some 10% of it as tax, 22% as tax. Now the remaining profit which is there with me, what can I do? I can pass it on to my shareholders as dividends, isn't it? But I'm not passing on to my shareholders as dividends. I'm keeping it with myself, undistributed profit. I'm not distributing it. If I'm not distributing it, then in that case, I'm keeping it for, maybe I want to grow my business. I want to use that for further growth of the business and other things. That is about undistributed profit. Okay. Yes. 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 Now you're right. 14663. Yes. Absolutely right. True. True. Prabhas. Right. Nishita, आप check करो बेटा आपका आंसर wrong क्यों आ रहा है? You have done something wrong. Okay. So we are through with this. So expenditure method, we have already shared personal consumption expenditure, gross investment, fixed investments, inventory investments. What is consumption expenditure? Consumption expenditure, what we consumers, we spend on goods and services. So we spend on goods and services, we spend on durable, we spend on semi-durable goods and services. That's about personal consumption expenditure. Then you have, this is expenditure method we are talking, okay? And you get what? GDP at market price. Gross investment. Gross investment kiska? This is about corporate we are talking. Corporate, they invest in buying machines, equipments, that is their fixed investments. Inventory investment, they buy raw material, they buy stock, isn't it? That's their inventory investments. I'm sorry. Then you go for gross residential construction investments. So residential construction investment, which is happening. So residential construction investment is also part of investments. So you have two categories of expenditure. One is consumption expenditure, one is investments. So investment, government also goes for investment. We also go for investment, and corporate also goes for investment. So all those investments are added. Plus government purchase of goods and services. So government also spends on buying administrative goods and services for administrative purposes. They buy goods and services for defense and other services. So these are all government consumption expenditure. Then net exports. So if you add all these components, you get what? You get GDP at market price. This is expenditure method. Okay. So this was a question which was asked in one of your papers. Which method is used? My screen. I hope now it is fine. Which method is used in India for measurement of national income? Also state the method which is considered the most suitable for measurement of national income of developed economies. So when we talk about India, you see that agriculture sector is production based. And do you think that farmers, they calculate income, that how much is the income generated from land, from labor, from capital and other? No. Very difficult. See, so what we do in the case of agriculture sector, we calculate how much is the output produced. So which method we use? We use output or the production method, that is value added method for agriculture. Reason being, they do not go for income tax. So there is no documented evidence for income. So we cannot go for income. Expenditure is not possible in the case of agriculture to that extent because they do not keep track about it. So best way to calculate income through in agriculture sector is through output method or value added method, because you can see that farmer has gone for sowing wheat, has used water for that, has used some fertilizers, and then what is the outcome? Wheat has been produced, and then it is sold from the farm field to the, has been taken to the mandi, and from mandi to the final manufacture. So value is added at each step. So production method in the agriculture. Manufacturing sector also, manufacturing, especially unorganized sector, it becomes very difficult to go for taking care about output method, because over there they are much more unorganized. So you go for, that is how, see, MSMEs are categorized as low income generating, low profit generating. So what is the parameter? MSMEs are micro, small and medium enterprises. So these are small firms which are operating. So there you calculate by income method. Then construction involves like expenses on cement, expenses on so many parameters. So over there, construction sector, we use expenditure method. So in India, we use different methods for different sectors, because in India, the market, the Indian sectors are highly fragmented, and it becomes very difficult. So manufacturing sector, where there are much more organized sector, industrial sector, countries which are more organized and industrial driven countries, where it becomes easy because they go for maintaining their income tax documents and others. So income method can be used. Even consumption method can be used in consumption driven economy, and countries which are more driven towards, so Asian economies are more consumption driven. So you can use expenditure method. India is agrarian economy, so you depend on more on value added method. So this is how countries which are more industrial developed countries, over there you can rely on expenditure method and income method also, because it is all documented. Okay. So this is how this answer has to be attempted, though it's of 2 marks, but you should understand the essence of it. Now, this is the question which was in November 21, and this was of 3 marks. The question is about income method. You can see we have shared income method. So what is given to you here? They have given, इसमें आपको क्या दिया है? आपको compensation of employees दिया है, rent, interest and profit दिया है. Okay. So rent, interest, and they have given you NDP at factor cost. You have to calculate GDP at market price. So you already have NDP at factor cost. आपके पास NDP at factor cost है. That value is 1450. You have to go to GDP at market price. For GDP at market price, from N to G, what you need to do, you have to add depreciation. From domestic is domestic, that is fine. Factor cost to market price plus net indirect taxes. Depreciation is given 26. So you add in this 26. Then net indirect taxes. Indirect taxes is given, indirect tax 57. You add 57 and you deduct subsidies 18. This will be what? Your GDP at market price. You will get GDP at market price. Then they are asking for mixed income. What is mixed income of self-employed? We have done through income method. You get what? NDP at factor cost income method. To get NDP at factor cost, what you have to do? Compensation of employees. Then rent, interest and profit, that is operating surplus, plus mixed income. This is given to you. This is 810 plus rent, interest and profit is given 453. Mixed income you don't know. NDP at factor cost has been given to you 1450. This is given to you. This is given to you. This is given to you. You can find out this. Okay, so mixed income you can get through this. Is it clear? Now this is which method? This is output method. Output method, it is value added method. How we are doing value added method here? They're asking to you calculate. आपको बोल रहे हैं वो कि आप calculate कीजिए GNP at market price. How do you get GNP at market price? Value of output आपको दिया है 1500 of primary sector. Minus कीजिए 750. Difference of this is value added in primary sector. Then next is 2700 value of output in secondary sector. Intermediate consumption secondary sector 1200. Minus कीजिए 1200. This gives you value added in secondary sector. Third is 2100, and from this you minus 900. This gives you value added at tertiary sector, service sector, tertiary sector. Add up all these three. You get what? You get GDP at market price or GVA at market price. This you get it. They're asking for GNP. So you have got GDP at market price. In this, what will you add? You will add in this NFIA. Where's NFI? This is given to you. So you will get the answer to this. Okay. So you have got 187 mixed income. Yes, right. And GDP at market price 15. Absolutely. So you all have got this answer. GNP at market price 3390. GDP. No. Tanvi, how come you have got GNP at market price? इसमें तो you see net factor income from abroad is minus. So you have to deduct. So basically GNP at market price will be less than GDP at market price. No, Tanvi? because net factor income from abroad is negative. Okay, so this is how you have to do it. Then this is the next question. NNP they're asking to calculate NNP at factor cost. NNP at factor cost कैसे मिलेगा आपको? How will you get NNP at factor cost? First and the foremost, which method is this? Which are the components of which method it is? It is of income method. When we talk about income method, what do you get? You get NDP at factor cost. How do you get NDP at factor cost? Compensation of employees, mixed income of self-employed, rent, interest, and profit. This gives you what? This gives you NDP at factor cost, isn't it? Once you get NDP at factor cost, they're asking you NNP. So you have to go to NNP at factor cost. NNP is from domestic to national. How do you go national plus NFIA? NFIA is given to you. This is given to 370. Add kar dijiye NFIA. You get NNP at factor cost. Or national income. So you will get national income through this. Since they have given this indirect taxes and subsidies and depreciation, you will not use these. These are just given to confuse you people. You should know about that. And in income method, what do you get? You get NDP at factor cost. What are the components of income method? Compensation of employees, mixed income, rent, interest, and profit. So this is not required only. They are asking at factor cost. अगर आपसे पूछा जाता at market price, then you could have used these things. But they have not asked for market price, इसीलिए you will not use these concepts. They are just given to confuse you. And this is 3-mark question straight you can get. Got it? This is 5-mark question and they're asking you what? They're asking you GNP at factor cost. GNP at factor cost and NDP at market price using expenditure method. These are the components. Consumption, expenditure, investments are all components of expenditure method. So you have personal consumption expenditure. This is C. This is exports. This is imports, M. And this is exports. Then this is investments. Consumption of fixed capital is depreciation. Then inventory investment is investments. Government purchase of goods and services is gross residential investments. Net factor income from abroad is NFIA. This is investments. And this is subsidies. Okay, now they're asking you what? They're asking you GNP at factor cost. Through income method, you get consumption plus investments plus government plus X minus M. This gives you what? This gives you GDP at market price. Sum up kijiye, you will get GDP at market price. From GDP market price, you have to go to GNP at factor cost. GNP at factor cost. How will you go from domestic to national? From domestic to national, you have to add NFIA. From market price to factor cost, you have to deduct net indirect taxes. You will get GNP at factor cost. You have to go NDP at market price. NDP at market price कैसे जाएंगे? इसमें से आप minus कीजिए depreciation. You get NDP at market price. Yes, very good. So you people have got the answer. Bounce हो रहा है, सर से bounce हो रहा है. Because आप free ना आप all throughout continue concentrate नहीं किया ना, इसीलिए आपको problem हो रहा है. If you would have concentrated all throughout, simple concept आप समझ लीजिए. There are 3 methods of national income accounting. एक method होता है अफरीन, ध्यान से सुनो. एक method होता है output method. Output method में आप क्या लेते हैं? You take output of goods and services. Output इट इज मोर रेलिवेंट इन एग्रीकल्चर सेक्टर। क्यों? क्योंकि वहां पे प्रोडक्शन होता है। सो बेसिकली आउटपुट में आप 3 सेक्टर्स हैं, एग्रीकल्चर, फिशिंग एंड माइनिंग, जो कि प्राइमरी सेक्टर है। सेकेंडरी सेक्टर विच इज मैन्युफैक्चरिंग सेक्टर, जिसमें सारा मैन्युफैक्चरिंग होता है। टर्शरी सेक्टर, सर्विस सेक्टर। तीनों का वैल्यू एडेड जब आप ऐड कर देते हैं, देन यू गेट एनडीपी एट फैक्टर कॉस्ट। एनडीपी एट फैक्टर कॉस्ट इज नेट डोमेस्टिक प्रोडक्ट एट फैक्टर कॉस्ट। वो आपको मिलता है इनकम मेथड, सॉरी, यू गेट जीडीपी एट मार्केट प्राइस इन आउटपुट मेथड। सो आपको मिलेगा जीडीपी एट मार्केट प्राइस। पर आपका नेशनल इनकम क्या होता है? नेशनल इनकम इज एनएनपी एट फैक्टर कॉस्ट। ठीक है। सेकेंड मेथड है इनकम मेथड। इनकम मेथड में कौन कौन से, जिसमें इनकम जनरेट होती है, इनकम किस किस की जनरेट होती है? इनकम कंज्यूमर्स की जनरेट होती है। यू गेट इनकम। कैसे मिलती है आपको इनकम? आप सर्विस करते हो, आपको सैलरी मिलती है, आपको कुछ कैश मिलता है, कुछ काइन मिलता है। उसके अलावा आपको पीपीएफ मिलता है, प्रोविडेंट फंड में भी आपका एम्प्लॉयर पैसे डालता है। दैट इज ऑल प्लस। ओके, दैट इज वन कॉम, दैट उसको क्या कहते हैं? उसको कहते हैं कॉम्पनसेशन ऑफ एम्प्लॉइज। सेकेंड कॉम्पोनेंट क्या है? अगर आप लैंड यूज कर रहे हो तो उसका रेंट होगा। अगर आप कैपिटल यूज कर रहे हो तो उसका इंटरेस्ट होगा। अगर कोई एंटरप्रेन्योर है उसको प्रॉफिट मिलेगा। तो रेंट, इंटरेस्ट एंड प्रॉफिट, उन तीनों को आप ऐड कर दोगे। कॉम्पनसेशन ऑफ एम्प्लॉइज को आप ऐड कर दोगे, प्लस मिक्स्ड इनकम। जैसे आप चार्टर्ड अकाउंटेंट हो, लेट्स से लॉयर है, डॉक्टर्स हैं जो अपनी प्रैक्टिस करते हैं, दे डू नॉट गो फॉर मेंटेनिंग डिफरेंट बुक्स। वो रेंट, इंटरेस्ट, प्रॉफिट को सेग्रीगेट नहीं करते, इसलिए उनको हम मिक्स्ड इनकम की कैटेगरी में रख देते हैं। तो देर आर, if you add compensation of employees, operating surplus which comprises of rent, interest and profit plus mixed income, आपको क्या मिलेगा? You will get NDP at factor cost। कौन सा मेथड है ये? इनकम मेथड। तीसरा मेथड है आपका एक्सपेंडिचर मेथड। एक्सपेंडिचर मेथड में सारे एक्सपेंसेस के पैरामीटर्स और इन्वेस्टमेंट के पैरामीटर्स। एक्सपेंडिचर कौन करता है? हम करते हैं, कंज्यूमर्स वी स्पेंड, देन गवर्नमेंट स्पेंड करती है। उसके अलावा हम इन्वेस्ट भी करते हैं। वेयर डू वी इन्वेस्ट? वी इन्वेस्ट इन हाउसिंग एंड अदर थिंग्स। तो वो हमारा इन्वेस्टमेंट है। तो रेसिडेंशियल कंस्ट्रक्शन इन्वेस्टमेंट आप देख रहे हो यहाँ पे, दिस इज रेसिडेंशियल कंस्ट्रक्शन इन्वेस्टमेंट। गवर्नमेंट भी करती है इन्वेस्टमेंट्स, तो गवर्नमेंट इन्वेस्टमेंट्स हो गए, ग्रॉस पब्लिक इन्वेस्टमेंट ऑफ गवर्नमेंट इज ऑल्सो देयर। देन यू हैव इन्वेस्टमेंट्स ऑफ प्राइवेट सेक्टर ऑल्सो, बिजनेस फिक्स इन्वेस्टमेंट्स है। तो इन्वेस्टमेंट्स हो गया, कंजम्पशन हो गया, उसके अलावा एक्सपोर्ट्स एंड इम्पोर्ट्स हो गया। व्हेन यू सम इट ऑल टुगेदर, आपको क्या मिलेगा? जीडीपी एट मार्केट प्राइस। बाकी आपको 3 फंडामेंटल रूल्स मैंने याद करा दिए हैं। सबसे इंपॉर्टेंट है आपके लिए जीडीपी। जीडीपी, व्हाट यू रीड इन द न्यूज़पेपर, क्या है वो? जीडीपी एट मार्केट प्राइस। नेशनल इनकम होती है एनएनपी एट फैक्टर कॉस्ट। डोमेस्टिक इनकम होती है एनडीपी एट फैक्टर कॉस्ट। कन्वर्जन्स कैसे करोगे आप? अगर आपको जीडीपी से जाना है नेशनल इनकम पर, इफ यू वांट टू गो फ्रॉम जीडीपी टू नेशनल इनकम, दैट इज एनएनपी एट फैक्टर कॉस्ट। गोल्डन रूल्स याद करिए। सी दिस नेशनल इनकम अकाउंटिंग, 2 चीजें इंपॉर्टेंट है। एक, 3 मेथड्स ऑफ कैलकुलेटिंग नेशनल इनकम, व्हाट आर द एक्सेप्शंस। नंबर 3, you should know about the deductions, derivations I want to say that अगर आपको जीडीपी दिया है, अगर आपको बोल रहे हैं जीएनपी कैलकुलेट करो, एनडीपी कैलकुलेट करो, डेप्रिसिएशन कैलकुलेट करो, मिक्स इनकम कैलकुलेट करो, so that you should know about। वो तभी आपको आएगा जब तीनों मेथड्स आपको ठीक से समझ में आ जाएंगे। एंड thirdly, you will able to understand concept wise। और मंत्र फॉलो कीजिए। 3 मेथड्स कौन से हैं नेशनल इनकम कैलकुलेशन के, उनके एक्सेप्शंस क्या हैं, उसके अलावा कन्वर्जन्स कैसे कर सकते हैं। और नेशनल इनकम, प्राइवेट इनकम, पर्सनल इनकम और पर्सनल डिस्पोजेबल इनकम में डिफरेंस क्या है, ये इंपॉर्टेंट टर्मिनोलॉजीज अगर आप समझते हैं, then you can solve any problem of national income accounting, and I'm telling you this is the most scoring topic of your syllabus. So I hope so it is clear to all of you. आई होप अब बाउंस नहीं कर रहा है। आंसर किसका बेटा? Accruing to government is referred to as income earned but not received. In government income is income, Manisha, which is income of the government. अगर आप पर्सनल इनकम कह रहे हैं तो पर्सनल इनकम आपकी इनकम कैसे हुई? वो तो गवर्नमेंट की इनकम हुई ना, वो गवर्नमेंट की इनकम हुई, आपकी इनकम थोड़ी होगी वो। हाउस होल्ड की इनकम तो नहीं हो सकती, इसीलिए उसको इट्स नॉट पार्ट ऑफ अस। वो गवर्नमेंट की इनकम है, आपकी नहीं है। ओके, सो I hope this is clear to all of you. I'll share answers for this. Harshul, आप अपने कैलकुलेशंस करके रखो, मेरे को कंप्लीट करना है ये रिमेनिंग टॉपिक्स। तो इनकम मेथड, वी हैव दिस क्वेश्चन वाज देयर 2 mark का क्वेश्चन। Income method is used in developed countries because they can go for segregating here easily because they maintain their account, they go for income tax filing, things are in black and white, it becomes easy. India जैसे country में मुश्किल हो जाता है to calculate all through income method. That is why we use different methods. तो एग्रीकल्चर में आप प्रोडक्शन मेथड यूज करेंगे, एमएसएमईज में आप इनकम मेथड यूज करेंगे, कंस्ट्रक्शन में आप एक्सपेंडिचर मेथड यूज करेंगे। ओके, then there's one term used in your book is about supra regional sectors. तो जब आप नेशनल इनकम कैलकुलेट कर रहे हैं, कुछ सेक्टर्स हैं, सी स्टेट वाइज सारी स्टेट्स अपना कैलकुलेट करती हैं इनकम, एंड देन दे गो फॉर क्लबिंग इट टुगेदर। बट कुछ चीजें ऐसी हैं स्टेट के स्पेसिफिक नहीं होती हैं, दैट कैन बी स्पेसिफिक टू कंट्री एज अ होल। जैसे आप देखिए रेलवेज है, बैंकिंग है, इंश्योरेंस है, telecommunication है, this is all central government, no, central government administration. So in that case it is very difficult to divide in state boundaries में उसको divide कर दो आप। So that is, these are known as supra regional sectors. ये sectors जो हैं जो ओवरऑल नेशनल लेवल पे ऑपरेट करते हैं उसको कहते हैं सुप्रा रीजनल सेक्टर्स, जिसमें कि इट इज वेरी डिफिकल्ट टू डिवाइड इनकम, एक्सपेंडिचर एंड आउटपुट स्टेट वाइज। So that is about supra-regional sectors. Okay, so supra-regional sectors you should know about. इसको कौन compile करता है? This is calculated by Central Statistical Organization. हर state में directorates of economics and statistics होते हैं, वो अपना contribute करते हैं, and then finally Central Statistical Organization इसको compile करता है. So this is what is about supra-regional sectors. This is one of the supra-regional sector example. Director of Economics and Statistics, Government of Chhattisgarh का example है ये, आप देख सकते हैं इसमें. So they have calculated, they are taking care about it. तो जैसे छत्तीसगढ़ में है उसी तरह से महाराष्ट्र होगा, पंजाब होगा, सब states में अपना होगा, and they will be calculating individually. But for supra-regional sectors, उसमें central government की तरफ से होगा, Central Statistical Organization की तरफ से होगा, because it becomes difficult for calculating here for the state wise. That is, these are known as supra-regional sectors. Okay, and the last part of your this unit is about, is GDP the right measure of well-being? क्या GDP well-being measure करता है country का? So अगर आप happiness index, if you know about happiness index, so basically, yes, you can answer in tabular form also. Okay, so I want to conclude this today with this very important thing. You know which is the happiest country in the world over the last 5 consecutive times? Finland. Finland is the most happy country, and India is not in the category of happy country to the level. Reason being, we are growing. GDP wise तो हम grow कर रहे हैं, but health आप देखिए, health issues हैं, corruption है, तो life expectancy issues हैं, ये सब issues out लोगों के पास well-being के लिए, happiness के लिए time नहीं है. They do not have time to spend time, leisure time and other things. So that is what is about. Pollution इतना increase हो रहा, inequality is so high in India, rich are becoming richer and richer, poor are further going down. So this is how pollution level is so high. So these are the factors हालांकि GDP wise we are improving, but when we talk about well-being is not happening. Reason being, people are not happy, people are highly stressed. Apart from that, if you say about defense expenditure of countries increasing, so defense expenditure is increasing because it is simply we want to avoid any contingency. That is why we are spending on defense. But agar ye problem nahi hota, then that money which we are spending on defense could have been utilized for so many other things. That is what is about drawback of GDP. So GDP one way is good because it helps in policy makings. So government of India today talking about के COVID की वजह से health infrastructure पे इतना करना है, new education policy पे we have to spend money, we have to spend on girl child, we have to spend on like equity in the country, inclusion in the country. That is all part of GDP which has given insight to the government to work on. So these policies are helping in well-being, but on the other front, we are lacking in terms of well-being. Where we are lacking? For example, I say that production of cars are increasing, so GDP बढ़ रहा है, but cars की वजह से congestion कितना बढ़ रहा है, pollution कितना बढ़ रहा है, हमारा reliance oil पे कितना बढ़ रहा है, other components which we are having problem because of that. So these are all factors which are adversely affecting. So GDP that is why is known as imperfect measure of well-being, because बहुत सारे ऐसे parameters हैं जिसमें कि आप देखिए some people have money to buy their personal aircraft. Some people in the country do not have money to have food in a day. And then we say we are a developing country. So the level of inequality in India, goods which are not available to the set of people, clean water nahi hai logo ke paas, accessibility to basic medicines nahi hai. So pollution itna high hai, productivity itni low hai. Some sectors are very regional imbalance itna zyada high country mein. Certain areas are highly crime prone. So these are all factors which are depicting that yes, country is growing, GDP is increasing. We say we are at 8%, 8% plus, but actually well-being of people is taken care here or not. That's also equally important. So these are the drawbacks of GDP, which you should know about. So this is about negative and positive externality. Agar aap padhenge, negative externality means which as pollution is negative externality. Some people are using more cars. Some people are having n number of overconsumption of water, and others are suffering because of that. So externality is one person is doing और उसका impact दूसरे पे हो रहा है. अगर positive हो रहा है तो positive externality, अगर negative हो रहा है तो negative externality. So this is how it works. So corruption is negative externality, pollution is negative externality, positive externality, green is positive externality, isn't it? CSR activities which people go for helping people is about positive externality. People creating awareness about COVID is positive externality. People creating happiness club and helping others is positive externality. So these are the components which are important over and above GDP, which one should understand about. Okay. Okay, so let's wind up for the day, and for answers, I'll share these answers by mail in that your mail. Okay. So yeah, 136. Absolutely right, Harshal. Absolutely right. Yes, good. You have read in 12th. Good. Okay, so thank you so much and take care all of you. I hope आप लोग समझ गए एसेंस इस यूनिट का, इस चैप्टर का आपके लिए इम्पोर्टेंट है. नेशनल इनकम अकाउंटिंग के सारे कॉन्सेप्ट्स क्लियर होना, कन्वर्जन्स आपको पता होना चाहिए, मेथड्स आपको पता होना चाहिए, 3 methods of calculating national income. And apart from that, you should also know the difference between private income, personal disposable income. Okay, so and we have also done other components of well-being is important, significance is important, and limitations of GDP is important. So I hope you have got the essence of it, and you need to work on it. Practice करना पड़ेगा आपको थोड़ा इसके लिए. Okay. Okay then, thank you so much. Take care all of you.